Hey everyone, welcome back to the channel. Today we're diving into a question that many of you are wondering now. Should you buy, lease, or finance a new car? This topic is surprisingly controversial, with passionate advocates for each option. But as a banker, I'm here to break down the numbers and give you an objective analysis. By the end of this video, you'll understand the pros and cons of each option and be equipped to make the best financial decision for your situation. Do watch till the end so you can make an informed decision. Before we dive in, I want to remind you to hit that like button and subscribe if you haven't already. It really helps my channel grow, and I appreciate your support. Without further ado, let's get started. Let's start by defining our three main options. 1. Buying outright with cash. 2. Financing through a car loan. 3. Leasing. Run through some real-world examples and discuss the factors you need to consider. Let's get started. Option 1. Buying outright with cash. Buying a car outright means paying the full price up front. It's the most straightforward option, but it's not feasible for everyone. Pros. 1. No monthly payments or interest. 2. Full ownership from day 1. 3. No restrictions on mileage or modifications. Cons. 1. Requires a large upfront investment. 2. Opportunity cost of tying up a large sum of money. 3. Responsible for all maintenance and repairs. Let's talk about that opportunity cost for a moment. When you buy a car with cash, you're essentially locking up that money in a depreciating asset. You could potentially earn more by investing that money elsewhere. For example, if you bought a $30,000 car outright and could have earned 5% annually by investing that money instead, your opportunity cost over 3 years would be about $4,500. That's something to consider when weighing your options. Option 2. Financing through a car loan. Financing involves making a down payment and then borrowing the rest from a bank or the dealership. You'll make monthly payments over a set term, typically 3 to 7 years. Pros. 1. Lower initial out-of-pocket cost. 2. Build equity in the car over time. 3. Potential tax deductions on interest for business use. Cons. 1. Pay interest over the life of the loan. 2. Higher monthly payments than leasing. 3. Risk of being underwater if car depreciates faster than you pay down the loan. When financing, your interest rate plays a crucial role. As of 2024, average auto loan rates range from about 5 to 7% for those with good credit. However, rates can vary widely based on your credit score, loan term, and even the age of the car. Here's a quick example. Let's say you're buying a $30,000 car with a $5,000 down payment and financing $25,000 over 60 months at 6% interest. Your monthly payment would be about $483, and you'd pay about $4,000 in interest over the life of the loan. Option 3. Leasing is essentially long-term renting. You make monthly payments for a set term, usually 2 to 3 years, and then return the car at the end of the lease. Pros. 1. Lower monthly payments than financing. 2. Drive a new car every few years. 3. Covered by warranty for most of the lease term. Cons. 1. Mileage restrictions, typically 10,000 to 15,000 miles per year. 2. No equity built up in the vehicle. 3. Potential fees for excess wear and tear. Leasing can be complex, so let's break down how it works. When you lease, you're only paying for the depreciation of the car during your lease term, plus interest and fees. For example, if you lease a $30,000 car that's expected to be worth $20,000 after 3 years, you're essentially paying for that $10,000 of depreciation, plus interest and fees, spread out over 36 months. Now that we've covered the basics of each option, let's dive deeper into a real-world comparison. Real-world comparison. Buy versus finance versus lease. For this example, let's use a popular midsize SUV, the 2024 Toyota RAV4 Hybrid. The MSRP is about $31,475. We'll assume a 3-year term for comparison purposes, and a down payment of $3,000 for all options. Scenario 1. Buy outright. Total cost, $31,475. Opportunity cost, assuming 5% potential return, $4,721. Total 3-year cost, $36,196. Scenario 2. Finance. Loan amount, $28,475. MSRP, down payment. Interest rate 6% for 36 months. Monthly payment, $866. Total payments, $31,176. Total 3-year cost, $34,176. Scenario 3. Lease. Assuming a residual value of 67% after 3 years, based on industry averages for the RAV4. Monthly payment, $394, calculated using typical lease factors. Total lease payments, $14,184. Total 3-year cost, $17,184. At first glance, leasing appears to be the cheapest option by far. However, remember that at the end of 3 years, you don't own anything with a lease. With buying or financing, you own a car that still has significant value. Let's factor in the resale value after 3 years. The RAV4 Hybrid holds its value exceptionally well. Let's assume it's worth $24,000 after 3 years. Adjusted 3-year costs. Buy outright, $36,196 minus $24,000 equals $12,196. Finance, $34,176 minus $24,000 equals $10,176. Lease, $17,184. No car to sell. Now we can see that financing actually comes out ahead in this particular scenario, followed closely by buying outright. Leasing is the most expensive option when you factor in that you don't have a car to sell at the end. However, this is just one scenario. The numbers can change dramatically based on factors like 1. The specific car you choose. Some cars depreciate much faster than others. 2. Your credit score and the interest rates available to you. 3. Special deals or incentives offered by manufacturers. 4. How long you plan to keep the car. 5. Your annual mileage. Let's talk about some of these factors in more detail. Depreciation. Depreciation is the single biggest cost of car ownership, and it varies widely between makes and models. Luxury cars tend to depreciate faster, while some brands like Toyota and Honda are known for holding their value well. For example, a $50,000 luxury car might lose 50% of its value in 3 years, while a $30,000 Toyota might only lose 30%. This can have a huge impact on the total cost of ownership, especially if you're financing or leasing. If you're buying a car that depreciates rapidly, leasing might actually be a better option because you're only paying for the depreciation during your lease term. On the flip side, if you're buying a car that holds its value well, buying or financing could be more advantageous. Credit score and interest rates. Your credit score plays a huge role in the interest rates available to you, which can significantly impact the cost of financing or leasing. As of 2024, here's a rough breakdown of auto loan rates based on credit scores. Excellent, 750 plus, 5 to 6%. Good, 700 to 749, 6 to 7%. Fair, 650 to 699, 7 to 9%. Poor, below 650, 9+%. These rates can make a big difference. On a $25,000 loan over 60 months, the difference between a 5% and a 9% interest rate is about $2,800 in total interest paid. If you have excellent credit, financing becomes more attractive. If your credit needs work, leasing might be a better short-term option while you improve your credit score. Special deals and incentives. Manufacturers often offer special financing deals, cashback offers, or lease incentives. These can dramatically change the equation. For example, if a manufacturer is offering 0% financing for 60 months, that could make financing the most attractive option by far. Always check for current offers and incentives before making your decision. Sometimes, these deals can make a car that would otherwise be out of your price range more affordable. How long you plan to keep the car. If you're the type of person who likes to drive a car until the wheels fall off, buying or financing is usually the better option. The longer you keep a car after it's paid off, the more value you get out of your purchase. On the other hand, if you enjoy having a new car every few years and don't mind never owning your vehicle outright, leasing might be a good fit. Annual mileage. Mileage restrictions are usually included in leasing agreements and range from 10,000 to 15,000 miles annually. If you go over this limit, you'll have to pay a per-mile fee, which can add up quickly. If you have a long commute or frequently take road trips, buying or financing might be a better option. You won't have to worry about mileage limits, and high-mileage cars often have lower resale values, which means buying can be more cost-effective in this scenario. Other factors to consider. Maintenance and repairs. When you buy a car, you're responsible for all maintenance and repairs after the warranty period. This can add significant costs, especially as the car ages. With a lease, the car is typically under warranty for the entire lease term, so you're not responsible for most repairs. However, you still need to maintain the car according to the manufacturer's schedule. If you're financing, consider looking for a car with a longer warranty period or purchasing an extended warranty to cover potential repair costs. Insurance costs. Leased cars often require more comprehensive insurance coverage, which can increase your insurance costs. When you own a car outright, you have more flexibility in choosing your level of coverage. Tax implications. If you use your car for business purposes, the tax implications can vary depending on whether you buy or lease. Consult with a tax professional to understand how each option might affect your tax situation. Flexibility. Leasing offers more flexibility to change cars frequently, but less flexibility in terms of mileage and modifications. Owning a car gives you complete control over how you use it, but you're stuck with it until you sell or trade it in. So what's the verdict? Should you buy, lease, or finance? As with many financial decisions, there's no one-size-fits-all answer. The best choice depends on your individual circumstances, preferences, and financial situation. Buying outright might be best if you have significant savings and don't want monthly payments. You plan to keep the car for many years. You drive a lot of miles annually. You want to modify your car. Financing might be best if you want to build equity in an asset. You have a good credit score and can get a low interest rate. You plan to keep the car for at least 5 to 7 years. You want the freedom to sell or trade in the car whenever you want. Leasing might be best if you enjoy driving a new car every few years. You don't drive more than 10,000 to 15,000 miles per year. You use the car for business and can deduct lease payments. You don't want to worry about selling or trading in your car. Remember, these are general guidelines. To make the best decision for your situation, you need to run the numbers yourself. Here's a step-by-step process I recommend. 1. Determine your budget, including how much you can afford for a down payment and monthly payments. 2. Choose a specific car model you're interested in. 3. Get quotes for buying, financing, and leasing that car. 4. Calculate the total cost over the time you plan to have the car, including estimated maintenance and insurance costs. 5. Factor in your lifestyle considerations, like how many miles you drive and how often you like to get a new car. 6. Make your decision based on both the numbers and your personal preferences. Don't be afraid to negotiate, especially at dealerships. They often have room to maneuver on price, interest rates, and lease terms. Lastly, remember that a car is typically a depreciating asset. While it's important to get a good deal, don't stretch your budget too thin for a car. A good rule of thumb is to keep your total car expenses, including payment, insurance, gas, and maintenance, under 15 to 20% of your monthly take-home pay. I hope this breakdown has been helpful in understanding the pros and cons of buying, leasing, and financing a car. Remember, the best financial decision is the one that aligns with your goals and fits comfortably within your budget. Do you prefer to buy, lease, or finance a new car? Comment below. You may also wish to check out my other video on the #1 wealth killer in the link above and in the description down below. If you enjoyed this video, do like and share this video so that more people will learn about the considerations when buying, leasing, or financing a new car. Check out this playlist of my top 10 videos for creating wealth, and I'll see you in the next video. Take care.